from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, it's Bret Taylor's week, and we're just living in it. He's now Salesforce's new co-CEO. The news coming just a day after Taylor was named chair of Twitter's board. Meantime, David Marcus is out at Meta. The co-creator of the yet-to-be-launched Diem currency steps down, adding uncertainty to Facebook's digital payments aspirations. Plus, that's a wrap on Black Friday and Cyber Monday in the United States. We are speaking to the president of the online marketplace Shopify about what trends he saw during the shopping spree. And for a fifth day, the embattled THERANOS founder Elizabeth Holmes takes the stand. The latest twist in her testimony, Holmes claims she was raped at Stanford. We'll ask a top law professor what he makes of her defense. We'll get to all that in a moment, but first let's get a look at the markets, where comments from Fed Chair Jerome Powell weighed heavily on the major benchmarks. Bloomberg's Kriti Gupta with us for the details. Kriti, walk us through the day.
Yeah, Emily, a double whammy when it comes to the stock market in particular, especially when it comes to those tech stocks, which really weren't able to lift the market higher at the far start. You had futures just lower right off the bat. A lot of this has to do with that COVID uncertainty. Is the Omicron variant, is it actually as dangerous as, say, some countries are willing to bet that it is? Really locking down. And it's that really uncertainty that you're seeing weigh on the markets here. The S&P 500 down 1.9%. The NASDAQ just slightly better than that, but still down 1.5%. The VIX is really what I want to keep our eyes on, because it's up to a 27 handle. The equity volatility really catching up to bond volatility. Now, let's get to the other part of the equation, which, of course, is Chairman Powell coming out and saying, well, we might actually start to pick up the taper a little bit and address those supply issues, which is essentially inflation at the core of it. So you did start to see 30-year yields actually drop to the lowest since January. I bring up 30-year yields, Emily, because this has a lot to do with tech. They're actually seen as long-duration assets, which is really why we like to sew together the tech world and the bond world. The idea here that the curve, the treasury curve, it's flattening. There's no longer a premium, an extra bonus that you get for actually taking on that risk. And if you start to see that sentiment way into tech as well, you could start to see tech actually lead the declines rather than outperform. Let's hit the micro really quickly and end with that with Salesforce, because it is down after hours, down almost 6%. This, of course, coming after they did beat their earnings, but they also gave a very disappointing sales and profit forecast as well. And talking about promoting Bret Taylor to becoming chief co-executive officer. But Emily, right now, it's that forecast that's really weighing on the stock after hours.
All right, big news over at Salesforce. Kriti, thanks so much for breaking it down. I want to continue with Salesforce now, the stock falling on that disappointing profit and sales forecast. But again, in a separate announcement, Bret Taylor has been promoted to co-CEO with Mark Benioff, who will also remain board chair. Taylor has been president and chief operating officer of Salesforce since 2019. For more, I want to bring in Liz Herbert, Forrester Research vice president and principal analyst. This has been speculated about, Liz, for quite some time. What do you make of this announcement?
Exactly. I think it's no surprise. Bret has been there. He came in actually through a collaboration-oriented acquisition. That's clearly a direction that they continue to invest in, most recently with the phenomenal Slack acquisition, the biggest in their history. So no real surprises for most that he's now being elevated yet again to the co-CEO.
I actually asked Bret Taylor this very question about 6 months ago on the show, whether there was any truth to the rumors. Take a listen to what he had to say then.
It has been speculated that you are the heir apparent to potentially the CEO job at Salesforce. Is there any truth to that?
Well, I mean, I can't comment on that, but I will say, we actually talked, I think, just a couple of weeks after I sold my company Quip to Salesforce. And I can't say I imagine sitting in this chair right now as COO. And it's been by far the most fun time of my career. And both my relationship with Mark, which is amazing, he's a mentor and a friend, but also just being at this company right now. As I said, to be able to provide digital technology to so many companies who absolutely need it right now is the most privileged position I could be in, both as a designer of software, but also as someone who has formed great relationships relationships with so many of our customers. So I'm really happy, and obviously can't comment on that rumor, but I'm very happy in the job I'm in right now.
Bret Taylor handled the Slack acquisition almost entirely, which was an incredibly large acquisition. Even Mark Benioff told me that. But how do you think they're going to divide responsibilities? How will this co-CEO role actually work? Let's remember this happened before with Keith Block, who was also promoted to co-CEO, and that didn't last too long.
That's right. Well, in general, most companies don't have a co-CEO. You saw that at their competitor SAP for a while, and they reverted back to a single CEO. But likely Mark will move on to other things, right? His real passion is so much greater than this, very successful cloud computing company. There are so many other causes that he lives for and that he promotes. And so likely I would see over time a gradual increase of Bret's responsibilities so that Mark can go on to some of those other activities that he's interested in, and that he's also been very successful in really changing the world in a lot of levels, whether it's the 1-1-1 model, or of course him and his wife, what they do for healthcare and the hospital and just so many different organizations that they contribute to.
So what do you make about the forecast? I mean, do you have any concern? This is a company that is competing in a world of software giants and commanding a premium price.
Exactly. So, Salesforce, first of all, they're very aligned with what we see today. Companies are reinventing themselves. Cloud increased and accelerated during the pandemic. They are right there. They are the original SaaS company, the SaaS poster child, and they're very much thought of as a platform to enable a company's digital transformation. They're also in the world of customer, which we've seen a lot of investment in, and increasingly in the world of employee, all areas of growth and investment. Salesforce over history has had a lot of ups and downs with profitability. This is normal for them. They spend a lot on sales and marketing. Some of that has been because they're paving the way in SaaS. They've had many unprofitable quarters. They've had great profitability sometimes. So, I'm not a financial analyst, but I don't see that as overly concerning. They invest a lot and they do spend a lot more than a lot of other tech companies do in many different areas. So again, this is the norm for them. I think longer term, what we see, they're broadening out the portfolio. They're appealing to more and more companies. They're now catching the next wave of the trend, which is the industry cloud, partially through velocity, but also their own investments. And then finally, they're expanding geographically. So, there's certainly a lot of room for them to continue growing. And they do tend to have these sort of cycles in terms of the profits that they are able to report.
Speaking of big enterprise, you are actually joining us from Las Vegas, where AWS reInvent is happening. AWS, of course, also has a new CEO, Adam Selipsky, who we spoke with just a couple of weeks ago. This was his first time giving the big keynote, filling Andy Jassy's big shoes. Take a quick listen to part of what he had to say.
The cloud has become not just another tech revolution, but an enabler of a fundamental shift in the way that businesses actually function. There's no industry that hasn't been touched and no business that can't be radically disrupted.
Liz, under new leadership, can Amazon maintain that lead in the $64 billion cloud market that is getting bigger, but with Microsoft and Google nipping at their heels?
There are so many parallels between the Amazon story and the Salesforce story. They both pioneered the markets that they're in. Of course, they are great partners. And really that culture, that commitment to innovation. Amazon famously takes a sort of start with the press release approach, think about the end result you want and work backwards. They've been very famous for that. They do that with their partners as well. They really are just the king of innovation. And they continue to really breed that. They also have a very customer-centric culture, which is a winning strategy these days. Obviously, we don't know a lot about how they'll perform under the new leadership, but just here at the conference, yet again, and I've been to many reInvents, so many new announcements from IoT to their various industry clouds like healthcare, as well as all of the different capabilities for developers. And, they just continue to impress with their pace of innovation and their creativity, their own agility, which are all the properties that we as Forrester think about when we think about a successful company in any sector.
All right, Liz Herbert, Forrester Research, Vice President and Principal Analyst. Appreciate all your takeaways. Thank you. Coming up, we're going to have more on Jack Dorsey's decision to step down as CEO of Twitter. And now Meta's head of crypto, David Marcus, also leaving. We'll discuss next. This is Bloomberg. Jack Dorsey's decision to step down as CEO of Twitter comes as the stock broadly underperformed other founder-led companies, from Elon Musk's Tesla to Reed Hastings' Netflix. For more, I want to bring in Bloomberg News executive editor Tom Giles. And Tom, yesterday, initially, the stock went up on news that Jack Dorsey would be leaving, but when we found out who it was, the stock went down. Why aren't investors liking what they see?
Well, the new CEO represents kind of the status quo in many ways. The important distinction here is that he is not running another company like Jack Dorsey was, and been the subject of a lot of criticism for, including having an activist investor. Now, Agarwal definitely represents a contrast in that regard, but in other ways, he is a continuation of what has been in place. He's been around for a decade. He's been in charge of big projects there. He has Dorsey's confidence, interestingly, but at the same time, you know, he doesn't represent, like, we're not expecting some radical shift in one direction or another. And he's still got a lot of the legacy problems at Twitter that Jack Dorsey had, including, you know, speeding up product development, bringing out new services and things that are going to increase engagement and get users excited about being there and advertisers excited about reaching those users on the Twitter platform, and something that really makes it stand out more and more from Snap, from Meta, and all the other social media platforms that we have so much access to now.
I want to bring in Jefferies equity research analyst for tech, Brent Thill, as well, Tom. And Brent, you've said that Jack Dorsey leaving as CEO is good for investors. Do you think that Jack Dorsey leaving is good for investors full stop? Or do you also think that Parag Agrawal becoming CEO is good for investors?
The stock has done nothing. So from an investor perspective, like, this is a really good thing. You just need change, right? If it's not working, you got to promote some level of change. And I think the thing with Twitter is that ultimately advertisers have not seen the ROI they've seen in Snap, they've seen in Facebook. And so you've got to improve the ROI to get those advertisers to spend. From a user perspective, they're not growing the US usage the way they should. They've set some very lofty goals. I ultimately think that, you know, this is a good thing. You never want the founder to totally leave. I think Jack is obviously an incredible visionary, and having him involved is important. But I think it was time for a change. And we've seen this, you know, at Splunk. We've seen this at other companies where really talented execs, they just kind of run out of runway, and they need to bring in someone new to look at it differently. So I think this is a good thing. I think many are asking why he would be appointed, given he has been there for a decade running technology. There has been many technology issues at Twitter. So I think there's been a lot of confusion around why bring a technologist in that may have been part of the problem. I'm not saying he was the problem, but I'm just saying that has been the criticism. And obviously the stock has done very poorly, down roughly 5% in the last 2 days on this announcement. So I think many felt like there would be more of a seasoned exec that has done this, right? He has largely spent his career at Twitter, and ultimately, obviously, a very distinguished engineer, super smart. Like, no one's going to disagree. Like, hey, you know, is he capable? He is. It's just, was he the right fit for this next chapter for Twitter? So We'll see.
Well, the question is also, what should that next chapter be? I mean, Parag is someone, obviously, who's been leading the blockchain efforts. We know how much Jack Dorsey cares about Bitcoin and cryptocurrency. Do you think that should be the future of Twitter? No,
I mean, I think, look, the social platforms are talking about the next version of this as being the metaverse. How do you make this more immersive experience? And what I found as a user of Twitter, it's just not captured me. I go on and then I leave. And when you're on Instagram, you're captured. They know what you want. They can target. It's relevant. Same thing for my kids on Snap, right? The younger audience is on Snap. The older audience is on Facebook and Instagram. And so I think they've just failed to capture the user. And that's why the US numbers have been, quite frankly, not that great, right? It's been tough. And so they've got to get a more interactive, immersive experience for the user. And that starts with the product. So clearly, you know, one of the kind of key takes of this is perhaps he brought these ideas to the board. He brought this to Jack, and Jack said, no, I don't know. But obviously, Brett Taylor now being the chairman, who I think we'll talk about Salesforce in a minute. But clearly, when you think about Salesforce.com and what Brett's done, and now the co-CEO, Brett's a great visionary in tech. And I think the combination of both of these individuals, they've upgraded at least. I think the perception that they're on this and that they can do the right thing.
It's certainly been a big week for Brett Taylor. Tom, over at Meta, we're also seeing David Marcus leaving. David Marcus, who of course ran PayPal, then went over to Facebook, tried to launch Facebook's cryptocurrency projects to much criticism and controversy, still hasn't quite gotten Diem off the ground. Interestingly, our Bloomberg contributor, David Kirkpatrick, said yesterday that he thinks that Jack Dorsey leaving Twitter, full stop, is kind of a rebuke of Mark Zuckerberg doubling down on Meta, in the midst of all this controversy and calls for new leadership there. What can you tell us about David Marcus's departure and what that means?
Well, I think as you mentioned, Diem really never got off the ground. Right from the start, they announced this thing in 2019 with all this fanfare. This was going to be this new currency that would be backed by a basket of currencies, including the dollar, including the euro. I think the thing about that, I really think it was ahead of its time, but very badly executed. They really did not foresee the amount of pushback they were going to get. First of all, having Facebook be part of it immediately raised questions about the credibility of it and questions about user privacy, which Facebook has shown it's not the most important thing on their list of priorities. And second of all, there was this question about how destabilizing might this be to global currencies. I think very visionary, and I think eventually you're going to see cryptocurrencies play a very disruptive role in global financial markets, transactions, payments, all of that stuff that it's supposed to be. I believe that there is potential for that, but this was way ahead of its time and badly executed. So when you launch a project like that and it doesn't take off, what is there left for you to do? I do think Facebook or Meta wants there to be a role for cryptocurrencies, for these alternative payment systems, especially in the metaverse. We think about this new vision of the way we interact online. I do think there's a role for it there. I do think Facebook and Meta sees it as playing a role in there. But we're so early in the process, and clearly what Marcus was trying to do was not happening.
Brent, what do you make of these moves at Meta in the context of what we're seeing at Facebook? And to be fair, even though Diem hasn't gotten off the ground, Facebook stock has soared in the same time that Jack Dorsey has been CEO of Twitter, and Twitter stock has lagged. What do you see in the comparison here?
I see Facebook having a great job targeting advertisers and getting advertisers to spend. Regardless of all the noise that's in the news about Facebook and Instagram as a platform, the ROI is still there. And the IDFA thing with Apple is a little bit of an overhang. We've got a couple quarters to get through that. But I think even the vision of what Zuckerberg's putting together with the metaverse, which is the next chapter of the internet, and this immersive experience that we're all gonna go into, and ultimately all the things that you can layer into that, it's exciting. And clearly we don't want it all to go digital, but certainly the excitement of what this could look like has so many different ramifications for business models and transactions. And I think there's a lot of excitement. And no one wants the world to lock down due to this virus, but ultimately, if we're going to be locked down, we might as well have an interactive internet in the digital world to hang out at our homes. So I think Facebook has just done a better job targeting. They've done a better job of what's on the next 3 to 5 years out. Clearly, this is a long ways away before Meta is going to be a big contributing factor. So I think it's a combination of factors there. But it goes back to usage. They're keeping the users on the platform. They're keeping the advertisers spending, and that's the most important thing. And that's all that matters right now. And they're doing a way better job than Twitter at this point on doing that.
And Facebook isn't giving up on crypto, by the way. Tom, go ahead.
Well, I would just add on top of what Brent said, don't forget the role that Instagram has played in helping Facebook reach that next generation. And in some ways, they actually need to go even further because Instagram even is losing it just a little bit. And WhatsApp globally is such an important messaging service. So there's all these ways that Meta has been much more effective at keeping people engaged and adding products, whether it's ones they've built or ones more likely that they've actually acquired.
Stefan Casriel will be replacing David Marcus over at Meta and will continue to lead those payments projects there. So we'll be watching those. Tom Giles, our executive editor for Bloomberg Technology, and Brent Thill, Jefferies equity research analyst covering technology. Thank you both. All right, coming up, big tech dealt another blow from regulators. After the break, we're going to find out the latest moves from watchdogs around the world against Meta and Didi next. And as we head to break, let's take a look at HPE, also out with earnings after the bell. Shares lower after hours after the company gave a disappointing quarterly profit forecast, hurt by the increasing cost of components for its computer equipment. We're going to keep an eye on it all. This is Bloomberg. Let's take a look at some stories making headlines around the world. Britain's antitrust watchdog has ordered Facebook parent Meta to sell Giphy. The Competition and Markets Authority found that last year's $315 million tie-up with the GIF search engine will reduce competition between social media platforms. It is the first time a global regulator has forced a big tech firm to unwind a completed deal. Meantime, regulators in China have dealt another blow to Didi, the giant ride-hailing company. They've issued a formal package of rules that protect the rights of millions of drivers that underpin the industry's growth. Beijing has already ordered Didi to delist from the U.S. after the company went ahead with an IPO in June, despite official objections. And a warning from SpaceX CEO Elon Musk. According to the website Space Explored, Musk says the company faces a genuine risk of bankruptcy if it can't launch one of its Starship vehicles at a rate of one every 2 weeks next year. The website quoted an internal email. In it, Musk indicated that production issues with the Starship's engine are worse than they seemed just a few weeks ago. Coming up, the weekend that was. We're going to be joined by Shopify President Harley Finkelstein to talk about how Black Friday and Cyber Monday fared this year, future e-commerce trends, and more. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get an update now on the markets with our own Kriti Gupta. Kriti, I know you've been looking at retail. What do you see?
Yeah, well, Emily, the e-commerce boom, well, it just keeps on going. I want to show you a chart here that compares those e-commerce companies to the retail sales broadly. You can really see that the method, even after we start to reopen the economy, the method people choose to shop is still undeniably e-commerce. That's that white line there. You can really see the shift in really beating those retail sales, those in-person retail sales that happened during the pandemic, and that just hasn't changed. So I wanted to take a look at some of those major global e-commerce retailers. Let's kick it off with Amazon, Shopify, Alibaba, and if you actually look at the divergence that you're starting to see, Shopify outperforming in a really big way. Alibaba really skeptical, or I should say really receptive, really vulnerable to that regulatory scrutiny, and that's why you've seen them year to date drop by 45%. Amazon as well, very, I should say, at the whim of those logistics, of those supply chain concerns. But Shopify is doing something right here, up by 34% year to date. And it's not just their global peers that they're beating, Emily. They're also beating the Canadian benchmark. Now, Shopify is, at the end of the day, a Canadian company, and it is the heavy hitter, the heavyweight in the benchmark. You can see not only has it been helping the index rally, but it's actually been outperforming it by a huge amount. The question, though, is that's been the trend in 2021 and in 2020. Does it continue in 2022? Emily.
All right, Kriti, thanks much. Let's get more on those e-commerce shopping trends with Shopify President Harley Finkelstein. Harley, great to have you back after a busy few days. What are the big takeaways? Black Friday, Cyber Monday, how does it all stack up?
Great to be on the show again, Emily. You know, at the end of the day on Friday, so 5 days ago, I tweeted that my prediction for this Black Friday, Cyber Monday is going to be that direct-to-consumer brands and small businesses will be the winners, and that this holiday shopping season would be a barometer for consumer interest in supporting independence. And so Black Friday definitely set the stage for the weekend. We saw total global sales of about $2.9 billion on Friday alone. That's a 21 increase since the previous Black Friday. Interesting enough, in 2019, our merchants crossed 2.9 billion for the entire weekend. And this year they did that in just one day. But now we have full stats for the entire Black Friday, Cyber Monday weekend. And here's what they look like. We saw about $6.3 billion happen on Shopify over the 4 days. That's a 23% increase year on year. 47 million consumers made a purchase from a Shopify merchant during the weekend. And average cart price was up $90 to $100 this year. So people spent more. But I actually think when you compare that to the industry-wide results, what you are seeing is that Shopify merchants actually outpace the industry at these astonishing rates. And I think it indicates that independent brands really were the winners.
So let's talk about that. And I'll admit, I've seen a lot of Shopify over the last few days trying to get my own holiday shopping done. On the other hand, you have Adobe coming out saying spending on Cyber Monday fell for the first time ever this year, clocking in at $10.7 billion or so. How do you square that?
I think it's a tale of two retail worlds. I think consumers are voting with their wallets now to buy from independent brands and small businesses. And when you look at the brands that are doing really well right now, whether it's Allbirds or Gymshark or Brooklinen or Skims or Bombas, those are all Shopify stores. In fact, Trina and Heather from Figs, who recently went public, a Shopify homegrown story, told us that they had record sales this season. So we are seeing that these direct-to-consumer brands are doing really well. Also, what we are seeing is more of the legacy, traditional brands like Lego, Mattel, Spanx, Dockers, Stetson are also now coming to Shopify to sell direct to consumer. So I think it is quite clear the future of retail looks like independent brands and not these legacy big box retailers.
Why do you think they're coming to Shopify versus the other options out there, whether it is Amazon or, selling at Walmart or Target or another big box store?
Well, when you sell in a marketplace, you're effectively renting customers from that marketplace. And I think more and more with these brands want to have a direct relationship with their end consumer. That's the first thing. But the second thing that's more important is when you sell on Shopify, you effectively are doing two things. One is you are selling across every surface area. I was on the show a couple of weeks back talking about our integration with TikTok and Spotify and Instagram and Facebook and Pinterest. When you sell on Shopify, you can sell across every surface area possible. But also when you hit that launch button on your Shopify store, you are effectively default global. It means you can sell to a global consumer base. And so this idea that you can get started on Shopify, but then when you go public, look in your Figs or Allbirds or Oatly, you can continue selling on Shopify. I think that makes us really unique.
Now, there's a lot of fear right now about supply chain shortages. Will you get your stuff on time? Will you get the stuff you want? My mom started shopping in October for all of her gifts, for all of her gifts for the holidays. How is this impacting consumer decisions, and how bad is this shortage really?
Yeah. One of the things we've noticed is that merchants on Shopify have been incredibly resilient. They've gone from one obstacle to another, like the pandemic to supply chain. And we keep seeing this great resilience. I think shipping delays have definitely accelerated consumer shopping earlier, like your mom and my mom. And we're encouraging merchants to communicate that and let their merchants know that it's better to do so. But the supply chain reality looks very different for large retailers than it does for independent businesses. And I think what people assume is that these big box retailers may fare better versus independents because they have more scale. But actually, that is not the case. In fact, what we've seen is direct-to-consumer brands have much stronger margins, and therefore they can better weather the storm and leverage technology. And so we're actually seeing a lot of our merchants fare better than the biggest retailers because of that, because the big retailers simply have razor-thin margins.
So what are your expectations then for the next few weeks? Is everybody done with their shopping? Or not? Okay, there's still procrastinators out there.
I think there's some procrastinators out there, and I think you're going to see shopping continue. So again, the Black Friday, Cyber Monday weekend has really transformed in 2021 into a season as opposed to 4 days. But the fact that we saw over $6 billion happen in 4 days, it's still very, very important. I think consumers are going to continue shopping from their favorite brands well up into Christmas. And again, a lot of that is happening on Shopify.
And look, we're still feeling the impact of the pandemic. How will this year compare to next year? And what does that mean for Shopify if people do continue to go back to brick and mortar stores? And we saw them do that this year. What does that mean for Shopify?
Look, I think Shopify was a really unique business because we were very much a pandemic story where so much digitalization happened across so many retailers, and so many people started businesses and entered entrepreneurship in rates we've never seen before. But we're also this amazing recovery story because we see so many merchants of ours using more of our channels. We have a massive business just doing brick and mortar stores, and that's doing really well too. I think for us to be the entrepreneurship company and the retail operating system of the future, it means that we have to give merchants the ability to sell everywhere and anywhere. And that's what we're doing. And so we're bullish for a great 2022.
All right. Harley Finkelstein, president of Shopify. Thanks for joining us today. Appreciate it. Coming up, the latest from the trial of Elizabeth Holmes. And the jury at the San Jose courthouse has heard some shocking revelations over the last 5 days and the last 24 hours in particular. We'll talk about the THERANOS founder's defense strategy next. This is Bloomberg. The trial of the founder of THERANOS, Elizabeth Holmes, continues after she gave shocking testimony Monday that she had been the victim of rape while studying at Stanford. The founder of the failed blood testing startup saying the experience motivated her to pour herself into developing her blood testing startup. She's accused of multiple counts of conspiracy and fraud and faces up to 20 years in prison. And as the trial continues today, I want to bring in David Sklansky for more perspective on this. He is a Stanley Morrison Professor of Law at Stanford and faculty co-director of the Stanford Criminal Justice Center. David, this case has captured the fixation and fascination of the world, and I'm very curious, what is your reaction to Elizabeth Holmes testifying that she was raped at Stanford and that motivated her to pour herself in to Theranos?
Well, she didn't just testify about being raped at Stanford. She also testified that Sunny Balwani, who has also been charged in this case and will be tried separately and was the president of Theranos, repeatedly abused her in the course of their long-term romantic relationship. And that's not the typical defense you see in a fraud case.
What is the typical defense you see in a fraud case, and what makes this so unusual?
Well, the typical defense you see in a fraud case is the rest of what Elizabeth Holmes has testified to during her time on the stand, which is that she believed in the company, she relied on others, she delegated authority, and that she wasn't intentionally trying to deceive anyone, because that's ultimately what the prosecutors have to prove, not just that she deceived people, investors, patients, but that she intended to lie to people and deceive them. So her state of mind is critical, and it's quite common in fraud cases for defendants to say that they weren't trying to deceive anyone. They were themselves deceived, if anything, by other people in their organization. What isn't common is to hear testimony about the kind of sexual abuse and rape that Elizabeth Holmes has discussed on the stand.
Her attorneys have lined up a psychologist who specializes in domestic violence trauma as a potential witness. How difficult do you imagine this defense will be to pull off? And what does that signal to you about what's coming next?
Well, it's hard for me to say how difficult it'll be to pull off because I haven't been watching the trial and I'm not in the courtroom. The jurors are hearing a lot more evidence than any of us who are learning about the trial secondhand have before us. It's an unconventional defense in a high-level fraud case, but part of the reason for that is that most high-level executives are men, so it's relatively unusual to begin with to have a high-level executive charged in a fraud case who's a woman. And then for her to argue that the jury needs to understand the intimate partner abuse that she was suffering, it's not something that we have precedent for in fraud cases, and so it's hard to know how it will play with the jury.
I mean, that of course is the big question. What other evidence, what else is the jury going to need to hear in order to make their final call, to form their opinion about what actually happened here?
Yeah, they will want to hear more evidence, and they're going to hear more evidence about exactly who was making the decisions and what Elizabeth Holmes knew when she made the representations that she made to investors and to patients. And I think the way that they assess this other set of issues, the set of issues having to do with intimate partner abuse and intimate partner violence, will depend in part on what the defense argues is the significance, what effect they say that this pattern of abuse had on Elizabeth Holmes, and also on what the jury winds up believing about the effect that the abuse had on Elizabeth Holmes' mental state.
How often do you hear the defendant testify in a case like this? You know, we didn't know whether Elizabeth Holmes would testify at all, and here she is now on her 5th day. Yeah, well, in criminal cases generally, it's unusual for defendants to testify. I think it's more common in high-level fraud cases, partly because these are not defendants that have prior criminal convictions. And one thing that keeps a lot of defendants off the stand are rules of evidence that say that when you testify, your prior criminal record can be introduced against you. Elizabeth Holmes doesn't have to worry about a prior criminal record that will be introduced against her, and that's fairly common for defendants in high-level fraud cases. The other thing that's true about these cases is they often involve defendants who are articulate, smart, and self-confident, and they have they've gotten themselves to where they are in life in part by their ability to talk convincingly to people, and they tend to put a lot of faith in their ability to talk to people, and often they have good reason to do so. So it's not as unusual in these kinds of cases as it is in the vast run of criminal cases to see a defendant take the stand and testify. To hear a defendant testify in quite personal terms about the kinds of things that Elizabeth Holmes has testified about is unusual. So last quick question, you know, does the case, is it more likely to go in the defendant's favor when they do testify or not? I mean, what does the data show? I don't think we have good data on this. And I think it really depends on the circumstances. It depends on what the other evidence in the case suggests, how convincing the defendant is on the stand, and how convincing the prosecutors are in rebutting what the defendant has said on the stand. All right, well, lots to continue to digest as Elizabeth Holmes continues to testify. David Sklansky, Stanley Morrison, professor of law and faculty co-director of the Stanford Criminal Justice Center. Really appreciate your perspective here today. Well, electric cars will account for about half of all auto sales in the world's major markets by 2030. This according to a new survey of car executives by consulting firm KPMG. EVs make up less than 10% of global sales now, but execs predict that will increase as the cost of battery-powered vehicles reach the cost to those powered by internal combustion engines. And EVs aren't just for mainstream consumers. We're seeing them in the world of racing, and there is a new motorsport that's racing to save the planet. It's called Extreme E. Quick Take's Matthew Long met McLaren's XE drivers to learn all about it.
About going fast. And with Extreme E, this is literally a race for the planet.
It's a brand new form of motorsport, fully electric vehicles, off-road vehicles, travelling to remote parts of the planet that don't normally see motorsport or any kind of racing of any kind. The areas that we're travelling to, they're being selected because we're able to bring a spotlight to talk about climate change. Unlike some other international series that travel around the globe, Extremely all the vehicles and the kit and everything is transported by boat by the St. Helena, but it's also a travelling laboratory. You know, it's a great opportunity to be taking a travelling laboratory into these areas that, you know, they're being directly affected by climate change, but they're probably not seeing what's also happening in terms of the research and the development and the learning side of it. That makes sense. It's sort of been removed from it. I think you're pretty excited with your science background.
Yeah, the scientists on board will get an opportunity to collect data from each location, even from the oceanic journey from one location to the next, and establish a bit of a status quo of where we're at to teach the rest of the world.
Yeah, and I think, like, especially a lot of people think electric cars are slow. That's obviously not true. This helps people understand that you can have an electric car, you can go fast.
Yeah, I think that's a great point about it, is that it's a really exciting new form of motorsport. It's not trying to reinvent any existing form of motorsport. It's something that's never been done before, you know, in these remote locations on tracks that have never ever been raced, or, you know, never ever seen an electric vehicle.
Motorsport from the beginning, I think, works and has worked for more than 100 years by pushing the envelope of technology with cars. And whether it was, you know, coming up with a 9-bearing system in this engine back in 1911 that was more reliable through a 24-hour race or whatever, it's always pushed the envelope of what was reliable, safe, and performance. And I think with electric, with EV, motorsport can operate the same way. Extreme E comes at a pivotal time, really, in motorsport here. We're able to prove in a very exciting way that you can take cars and race them, expand their technology, innovate on their safety, their performance, their reliability in a way that is even a positive impact in the end on the environment, and shed light on environmental issues that are out there, and simple things that individuals can do to affect change on a huge scale. This opens the door for manufacturers to stay involved in motorsport, as they have through the decades. You can see the hulls of these race cars here have all pushed the envelope of technology for their era. Now the era is EV, and pushing that envelope for EV is critical that motorsport's involved in that. If we don't demonstrate through series like Extreme E that motorsport can be done in a responsible way and positively impact global issues, environmental issues, now then you may not be a world where motorsport survives that much longer. So I think this is a critical time for motorsport. I think Extreme E is taking the right step, and the future of motorsport depends on us finding compelling ways to race these electric cars against each other to prove their safety and their reliability and their performance to consumers in order to have motorsport survive.
It's a simple way of alternatively thinking and reusing the spaces that we once consumed. This is
Quick takes, Matthew Long there. All right, coming up, Amazon is dealing with some major labor pains. We'll talk about it all next. This is Bloomberg. Amazon is facing not one but two different labor issues. In Alabama, the National Labor Relations Board is granting warehouse workers a second union vote, while another labor union is calling on the Department of Labor to investigate the company about its reporting of COVID cases. For more on all this, Bloomberg's Spencer Soper with us now, who covers Amazon from Seattle. We're in the middle of, we're just finishing Black Friday, Cyber Monday shopping spree, and Amazon is dealing with these labor issues. What did the Labor Relations Board find so objectionable about how Amazon handled that union vote?
Yeah, well, if we remember, this went down during the pandemic, right? And so ordinarily these votes would take place on premise, like at the work site with National Labor Board officials there conducting the election. But because of the pandemic, they did this one via mail. And Amazon actually objected to that, did not want a mail-in election. But the Labor Relations Board said, we're going to have a mail-in election. And so then Amazon was concerned about turnout because it figured the more workers who voted, the better chances it had. And it installed a mailbox, actually appealed to the United States Postal Service to get a mailbox installed on the facility, like out in the parking lot. And that really angered the Labor Relations Board. They just said that Amazon has, put itself too much in the middle of this process by putting a mailbox out there that was in view of surveillance cameras, and it was encouraging employees to use the mailbox. It's really, according to the Labor Board, doing a lot of things that the Labor Board should be doing in terms of overseeing the election and encouraging people to participate in the process.
Meantime, you've got a labor group saying that Amazon is underreporting cases of COVID-19. What can you tell us?
Yeah, so this is a report that just hit today, and there's a labor group calling on OSHA, federal workplace regulators, to investigate Amazon and how it reported COVID-19 instances that were work-related. So last year, OSHA required employers to report any work-related COVID-19 cases as respiratory problems. And so what this labor group did was pull all of Amazon's disclosures to OSHA and found that Amazon reported only 27 potential work-related COVID cases out of its entire U.S. operation, and that's out of 20,000 employee cases that Amazon had.
Okay, lots to digest there, especially as the holiday shopping season continues. Bloomberg Spencer Schoper, thank you for that update. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by Global Foundry CEO Tom Caulfield, Thrive Global founder and CEO Ariana Huffington, and the CEO of Rocket Labs, Peter Beck. Big show. You don't want to miss it. I'm Emily Chang in San Francisco. This is Bloomberg.